We want to take you to the economy now. Red flags on Wall Street as the Dow Jones Industrial Average closed below 12,000 yesterday for the first time since March. Stocks have now dropped for 6 consecutive weeks. That is the worst weekly streak in nearly 9 years. Michael Santoli, senior editor of Barrons, joins us to discuss this troubling trend. Thanks for being with us.
Sure, good morning.
All right, here's what we know. We know that there has been a steady stream of disappointing economic news in the past few weeks. But what we have not seen is this extended losing streak. Since 2002. What's causing this?
It really is kind of a softening up of the economy starting in about early May or mid-April, where we've seen housing, we've seen jobs obviously disappoint a little bit, and manufacturing, which had previously been actually kind of a strong suit, decelerate a bit. So the market's kind of absorbing this idea that the economic trajectory is not quite as strong as we thought coming into the year. But even though it's been a long losing streak, it's not been a particularly violent loss. It's only down about 6% from its high, the Dow. So it's not as if people have been panicking. It's just that they're kind of tempering their expectations for the economy right now.
So is it more of a pullback, or are investors really worried that this can become something permanent?
Well, at this point, I think it's a pullback. This is pretty much what we saw even in the mid-2000s, 2004, 2005. We also back then, let's remember, had a relatively fragile economic recovery, at least was perceived that way. We did have kind of fits and starts in the economy. I think the important thing to emphasize is that even though these numbers have been disappointing, they still point to a growing economy, although a slow-growing one.
There's a lot of liquidity out there. There is also a lot of hesitancy. So what is keeping investors from investing and companies from hiring?
A few things are going on here. Obviously, it's because we're not quite sure how strong the economy is going to be. In Europe, obviously, we have these fears about their government debt. Greece is the focal point, but even other peripheral European governments are in trouble. And in Europe, they seem to almost be engineering a recession. So these are the things that people are worrying.
So what's it going to take to turn this around?
It's going to take a little more sustained period of genuine growth when people are basically unequivocally saying the economy is kind of out of the woods. Big companies are equipped to invest and to hire and to spend, and they have record cash levels right now. So what they really need is that signal that the growth opportunities are there before they start to pull the trigger.
Talk about signals. I want to show you a number here. The U.S. deficit is over $927 billion. Is Wall Street worried at all that Congress will not be able to reduce that number?
I think it's kind of a psychological overhang. I don't think anybody on Wall Street genuinely believes that Congress is essentially going to push the U.S. government into a default type situation. But I do think it's one of those things that is as a long-term concern, is weighing on everybody's mind, yes.
Very quickly, are we going to see a 7th week of this downward news?
It's very difficult to say. I do think that expectations have been tempered enough that any almost decent news is going to be taken as positive. So I don't think the record would show that 7 down weeks are very likely.
We need some positivity, no doubt. Mike, thanks so much for joining us. We do appreciate it. And this Tuesday on The Early Show, we'll have a very special town hall devoted to the economy. A group of Republican leaders will answer your questions. This follows a town hall that we did about the economy with President Obama. And we need you at home to send the panel questions. To find out how to do that, just go to theearlyshow.cbsnews.com.